there, folks. My favorite $2 stock. We got to talk about this baby tonight. So they just reported earnings. I want to look at their earnings. I want to give you my take on this. If I'm buying the stock, if I'm selling the stock, we're going to listen to the earnings call together here. Planet 13. It's a company I first came across in late 2019. And the first shares I ever bought in the Planet was, if I recall, it was around $1.25 or something like that. And I mean, ever since then, I've just been kind of accumulating shares here and there, especially when it's under $3. That's when it's usually the most attractive pricing for me, is when it's under $3. That's usually where I'm a more aggressive buyer. I'm willing to buy this stock all the way up to about $5 as a long-term investment. But for me, under 3 is usually like that's attractive pricing for me personally that I really get excited about. And recently it's been trading in the 2s, so which makes the stock obviously a very attractive buy for me for many, many months to go in the future. So let's get into the numbers. Let's go through all this. Let me give you my perspective on these earnings, the good, the bad, the ugly, all those sorts of things. Obviously, their Las Vegas superstore, their crown jewel. After that, the Orange County store, which just opened this past year, which is in a ramp-up period now. I'm really excited to see the numbers that come out of the Orange County store starting this summer. They also have a Medicine store, which is a smaller format store in Vegas as well, and they own a bunch of their own brands, which is pretty darn cool. Now, if we look at the numbers here, Planet 13 announced Q4 and full year 2021 fiscal results. Q4 2021 revenue came in at $29.9 million. That was up 48% compared to Q4 of 2020. Q4 2021 net loss came in at $5.1 million. This is usually their weaker period for them as far as the quarterly numbers, the winter time. Q4 2021 net loss of $5.1 million. That was compared to a net loss of $18.2 million in Q4 of 2020. Q4 2021 adjusted EBITDA came in at about $1.9 million. Full year 2021 revenue came in at $119.5 million, up 70% compared to full year 2020. Okay, so yeah. 70% growth is pretty darn impressive. Full year, and that's even with Orange County not ramping very strong because of all the mask mandates, everything that's been going on in California. I think we all know that a lot of that's gone away now, thank goodness. Full year 2021, net loss came in at $19.5 million compared to a net loss of $25 million in the previous year. Full year 2021 adjusted EBITDA came in at $16.9 million for the Planet overall here. So balance sheet wise, they got about $61.8 million of cash compared to $79 million. Obviously, they've been spending on some acquisitions, building out some new stores, those sorts of things. So that's something to keep in mind. Total assets for the company came in at $216 million compared to $150 million at this time last year. Total liabilities came in at about the same for the company there. As far as recent highlights, on October 1st, Planet announced closing of the acquisition of their Florida new license. On December 15th, 2021, Planet announced they basically launched a shop-in-shop in the Planet 13 Las Vegas store. On December 20th, Planet announced a proposed acquisition of Next Green Wave. All right. On February 11, 2022, Planet's registration statement, Form 10-K, filed with the U.S. Securities and Exchange Commission, became effective, and Planet 13 became a U.S. U.S. reporting company as such date. Which is kind of just a good step in the right direction as far as governance and reporting and all those sorts of things. On March 2nd, 2022, Planet announced closing of its acquisition of the Next Green Wave. On March 17th, 2022, Planet announced the initiation of the Florida dispensary roadmap with a lease of the first dispensary in Jacksonville. All right. So overall, as far as the numbers, I would call them a mixed bag. They came in a little light on revenue. They came in a little better than expected with some profitability metrics and things like that. So yeah, I would call the earnings a mixed bag. I wouldn't call it like, oh, this is such a great earnings. Wow, they killed it. They didn't kill it. They didn't do anything like that. It was just a mixed bag earnings, some good, some bad overall in the numbers. As far as anything in the numbers changing my long-term thesis around this one? Absolutely not. There was some, and we're going to listen to a conference call, which is the most important thing when it comes to the Planet. But I mean, there was some kind of, I guess you could say, gripes, and I even saw it in the private stock group around the Orange County store. And a lot of people, definitely second guessing Planet's decision for the Orange County store and how that's doing and those sorts of things. My perspective on this is, you've got to let this kind of play out a bit when it comes to Orange County store. Even the Vegas store, which is the crown jewel of the company, did not ramp super fast. And there was a lot of people that thought, that one was destined for failure. A lot of people had thought that were even in from the industry. And so you got to let that play out. And now, obviously that's the crown jewel of all pretty much cannabis related stores out there in the United States of America. Like if you told every single company they could have a chance to have one store in the entire United States of America, I don't think there's any company that would second guess and say, I want that Planet 13 store that's in Vegas. And so when I look at this, you got to let this play out for a while. You can't make any rash decisions, especially if you're a long-term company focused on the long term. You got to let these play out. Let's see how the numbers shake out over the summer for the Planet location. It hasn't even been open a year, that store. It hasn't even been open close to a year. So you got to let this kind of play out a little bit, and we'll see how the numbers start filing in, and then we can make some more judgments on that. But what I do know is the California market will be a beast long term, okay? That is something I'm very, very confident in as far as all that goes, okay? All right, guys, so let's jump into this conference call now. Let me know your opinion on this and what we discuss here, and we'll jump into this. The player's already open. What in the world? Launch it. Oh, yeah, I know what's wrong here. Okay. I think the player is back here. As they say, don't hate the player, hate the game. All righty, guys.
Hi, everyone. Welcome to 13 Holdings 2021 fourth quarter
fast
and annual
forward to
financial
about
results
2 minutes when they
call.
actually start
As a
getting into
reminder,
it.
Hi, everyone. Welcome to Planet. We generated
Right about there.
Regarding our non-GAAP financial measures and reconciliation to the most directly comparable GAAP measures, please refer
Get some free stocks. Check out pin comment. Moo moo. You like free stocks?
Planet 13's financial
Get
statements
it.
are presented in
Pin
U.S.
comment.
dollars, and the results discussed during this call are in U.S. dollars unless otherwise indicated. On the call today, we have Bob Groesbeck, Co-Chairman and Co-CEO, Larry Scheffler, Co-Chairman and Co-CEO, and Dennis Logan, CFO. I'll now pass the call over to Larry Scheffler, Co-Chairman and Co-CEO of Planet 13 Holdings.
Good afternoon, everyone, and thank you for participating in our fourth quarter and full year call. Today, I'm going to discuss the performance in Nevada and California, and have Bob provide an update on our other growth initiatives later on the call. As predicted, after a very strong October, traffic slowed in November, December, driven by a slower tourist traffic, increased concerns around COVID, and the traditional seasonality. Overall, for the quarter, Nevada State.
That's pretty much what I saw consistently on the Strip. The Strip was very, very slow from basically about November through January. And then from my understanding, things started to pick up a bit in February. And I can tell you now in March, it's a zoo down the Strip. It's insane, especially on the weekends. It is insane down there. So, a real slowdown. And so I'm not surprised that, the Las Vegas location was slow in November, December with everything that was going on with Rona, the mask mandates, all that type of stuff. And just going down the Strip, like that's what I saw consistently. So the good news is go down the Strip this Saturday and find what you find. Oh boy. Okay.
Sales were down 5% from Q3. Despite the slower macro market and significantly less tourist traffic, we were able to maintain market share north of 10% for the quarter. It's a testament to the strength of our team that even in a quarter with significantly fewer tourists, who are traditionally our main customers, who are able to maintain our market share. In Q4 in Nevada, we generated $19.9 million from the Superstore, $2.6 million from curbside delivery, and $2.9 million from medicine and $1.9 million from wholesale and other. Excuse me. For the full year, we generated $82.7 million from the Superstore compared to $53 million in 2020. The increase was driven by the expanded floor area and points of sale along with higher tourist traffic. $12.1 million from curbside and delivery compared to $13.9. The lower curbside delivery is consistent with our expectations, as many shoppers prefer the in-store experience. $12.7 million from medicine and $7 million from wholesale and other compared to $0.7 and $2.7 respectively in 2020. Both medicine and wholesale were effectively new revenue streams for us in 2020. Examples of us executing our plan to diversify our revenue streams. Overall, we grew Nevada revenue by 62.4% in 2021. The typical trend in Las Vegas is for a slow January and February, with traffic picking up in March and into the summer, trailed by a slow November and December. Last year followed this pattern, and so far this year, it's also been shadowing that trend. if not more exaggerated due to Omicron and consumer fears. The good news is that we're starting to see a pickup in traffic as we get into spring and closer to the summer. With concerns around COVID subsiding, we expect many events and conferences to be returning in full this year, leading to a strong bounce back in consumer.
Did a drive-by of the Planet store this past weekend, Saturday night, and it was definitely busy down there. Not like insane busy, like I've seen it sometimes in the past when it's just like out of control. But I wouldn't be surprised at all if this summer we see some of that activity come back. Like usually when I've seen the Planet the busiest is usually summertime-ish. Early summer is just usually a crazy, crazy time. So we'll see if that trend continues.
Customer traffic. This isn't the first time we've had to deal with COVID-related slowdown in traffic. And what we proved last time is that as the market returns, Planet 13 will be there to capture the growth. Our owned brands performed exceptionally well during the quarter, growing 21% sequentially in Q4, with strength continuing into Q1, when we broke $500,000 in wholesale revenue 2 months in a row. This is especially impressive since the market as a whole has slowed down during this time. According to research firm Headset, Trendy had 5% of the Nevada market for both the concentrate and vapor category in Q4. HaHa had 10% of the edibles and 5% of the beverages. Turning to California, we saw month-over-month sales growth throughout Q4 with 7.2% sequential growth over Q3. This is despite continued construction-related obstacles that are constraining traffic. Sales have been slower during the start of Q1 2022 as California was hit particularly hard by Omicron in January, leading to staffing issues and slower sales. I'll let Bob add more details to that. But we closed the acquisition of Next Green Wave on March 2nd, which will allow us to bring our incredibly popular brands into California, increase vertical integration to improve margins, and drive wholesale, increasing top-line revenue. We've taken further steps during the quarter to improve the margin profile at the store and expect improvement in our California operations with the addition of Next Green Wave.
Yeah, getting their brands in throughout Southern California and just California in general, specifically Southern California, is massive for this company. Remember, when you're investing or thinking about investing in the Planet, it's not just about those retail locations, right? All the ones they currently have and all the ones they're going to have in the future. It's about their own brands opportunity. So I've always viewed the Planet as kind of like, it reminds me a lot of like Cabela's, which was an old, very successful investment of mine, where they build these kind of superstores, right? Cabela's was in the camping space and all those sorts of things. Whereas obviously the Planet's in their space, but it's also those own brands, right? I mean, Planet's market share is a no joke. It's holy smokers. I mean, when you start talking about 5% market share, 10% market share, those are sorts of market shares that, you start thinking about if a company could build out the future Jack Jackson of this space, right? The future Budweiser of this space. I think a company that sets up very, very well for this is a Planet. So that's one of the biggest factors, and I think it's overlooked when people even consider Planet. They just think about the retail stores, and it's like that's half the story here. It's the same mistake that if somebody was looking at Amazon stock, they would just think about Amazon as like just the e-commerce side, and it's like, don't forget about Amazon Web Services. That's just as important, if not more important, than the other side of the business. So, if anybody's a shareholder of this company and thinking about it, definitely remember those. They have two core businesses. Okay,
both on a gross margin basis and as operating profit basis. If we're going to be able to achieve greater operating leverage. With that, I'll pass it over to Dennis to discuss our financials.
Thanks, Larry. Before I begin, I'll just remind everyone that all numbers discussed on today's call are stated in U.S. dollars unless specifically stated otherwise. So Q4 2021 is the first quarter that we are reporting under U.S. GAAP, having transitioned to a U.S. domestic issuer status in February of this year. One of the main differences in our financial statements is the accounting for warrants. The company has adopted the U.S. dollar as its functional currency under U.S. GAAP, and since the warrants outstanding other than the broker warrants are priced in Canadian dollars, it means that they are treated as a derivative liability as opposed to equity. Any changes in the underlying warrant values are recognized through the income statement as opposed to the statement of changes in equity. Well, one of the other main differences is the treatment of our cannabis under cultivation. It's no longer subject to the fair value accounting under the IFRS biological asset standards. And the other change is to the treatment of leased assets. Leasing costs are expensed as opposed to being capitalized and amortized as they were under IFRS. The treatment of warrants as a derivative liability results in a large non-cash swings in value that flow through the income statement. An example of this is in our 2020 full year results, where the large net loss was mainly driven by the change in the warrant valuation. As Larry mentioned, Q4 in the Nevada market was seasonally slow overall. However, we continue to maintain 10% plus statewide market share, which is our ongoing target. We believe that we have the ability to exceed our 10% market share target during the more tourist-heavy months of April through October. In California, we saw growth at the Planet 13 Orange County store, where increased customer awareness and our near-perfect Google reviews translated into more customer traffic at the store. Overall, the company generated $29.9 million of revenue in Q4, a 48% increase over last year's quarter. Revenue for the full year was $119.5 million, representing a 70% increase over 2020. Over the course of the year, we saw strong growth in our core Nevada market at our Medizin and Superstore locations, as well as growing contributions from wholesale sales in Nevada and the addition of California revenue from a Planet 13 Orange County store. Looking at Q1 2022, as you've heard from most of our peers, we are seeing a softer market due to a mix of traditional seasonality, constrained consumer wallets, and COVID disruptions, leading to some lost revenue. We are starting to see the traditional pickup of tourists in Las Vegas in the back half of March, and if past years are any indication, summer should be an exciting time for Las Vegas and Planet 13. Gross margins in Q4 increased to 54.3%, up from 53.4% over Q3 2021. The increase in gross margin was primarily driven by a shift in the promotional mix of our products across our retail locations as we look to maximize gross profit dollars and profitability over revenue. Gross margin for the full year was 55.2% compared to 49.8% in 2020. This was partially driven by the increase in our in-house brand as a share of sales, something we are continuing to focus on as a lever to increase our gross margins. Across our business, we continue to target gross margins in excess of 50% for the long term. Sales and marketing expense in Q4 was $1.8 million, down marginally from $1.9 million in Q3. We are working hard on maximizing profitability over top-line revenue and are focusing our marketing spend accordingly. Excluding share-based compensation, G&A expenses was higher than we would have liked for both the quarter and the year. The increase was based in part on significant cost increases related to our transition to U.S. GAAP and SEC registration. Along with that, we are seeing some pricing pressure for labor, but remain focused on cost control and generating cash flow over the long term. As of December 31st, 2021, the company had a cash balance of $61.8 million, no debt, and effectively fully paid up on our tax obligations. In a constrained capital market, one where you can't write off interest expense due to 280E, we continue to have one of the cleanest balance sheets in the industry to support further growth. As Bob will discuss in his comments, the company is...
Now, to give you some reference on how insane that is that they have $61 million of cash on the balance sheet, I just want to pull you up Planet's actual market capitalization here to show you like how insane of a number that is. So if we go to my watch list here and we go to the stocks I do own, we're going to find Mr. Planet. Where are you, Mr. Planet? Probably missing it here. Planet. Do I not see? Am I blind? Like literally, am I blind? I think I'm blind. Literally, I think I'm blind. Literally, it was at the top. It was at the top. Anyways, Planet. So Planet market cap as of today is $550 million, roughly. $550 million. And the company has $61 million of cash. So basically, company, over 10% of the market capitalization of the company is just sitting around in cash. That's just an insane number to think about. So sorry for being blind, guys. I literally can't see. Okay, apparently, like holy smokes.
With the rollout of its Florida roadmap, expanding our Nevada cultivation, and working on integrating the recently closed Next Spring Wave acquisition. We will continue to update the market periodically on the build-out and CapEx requirements of each. The plans we have in place focus our CapEx spend on the cultivation build-outs in Florida, the expansion of cultivation in Nevada. And each planned Florida retail location will be relatively inexpensive neighborhood-style store until that market transitions to an adult use market. We have sufficient cash on hand to fund all of our current growth initiatives. And with that, I'll pass the call over to Bob.
Thank you, Dennis, and good afternoon, everyone. We've been relatively quiet over the last few months, primarily because we've been focused on driving future growth for Planet 13 and shareholders.
Now, by the way, let me just give some reference. If you're wondering why does Bob sound depressed, he always sounds depressed, okay? The Planet could have 600% revenue growth and Bob would still sound like it. The man, on the conference calls, don't look for anything exciting, as far as a tonality when it comes to Bob on the conference calls. He consistently sounds, so no disrespect. It's just like, he's not somebody that talks excitingly on these conference calls every single time. He's very monotone, and that's just the way it is. So just so people know, the man's not depressed. That's the way he talks in these conference calls.
It's in Florida. We've got our expansion roadmap, which will take us to our 6 neighborhood-style dispensaries, which we expect to open in the first and second quarters of 2023, with 12 more to follow closely thereafter. All of these will be supported by cultivation and production to bring our award-winning flower strains and product brands to the market. We are planning to build our cultivation in Central Florida, primed for efficient distribution across the entire state, using modular and prefab building for indoor cultivation, and built basically the same specs as the next Greenway facility in California. This allows us to significantly speed up our time to market, reduce costs, and build in a modular fashion to meet our supply needs, all the while maintaining the quality Planet 13 and Next Green Wave have become known for.
What I'll say personally about the Florida opportunity is, even myself as a shareholder of this, I don't even know how big that can be. Obviously I know it's going to be a pretty big deal. They're talking about several stores. Obviously it's a medical market, will be a full market over time eventually for everybody. But, Florida's really a wild card. Planet's making a big bet on Florida, and I think it's because that could be one of these type of markets that maybe just in Florida alone, maybe it could end up making up like half the company's revenue over the next few years once they get, everything built up. Obviously, it's not happening this year, but potentially 2023, 2024. So I know Florida has huge potential, but I haven't necessarily modeled in the most aggressive numbers when it comes to the Florida expectations, because I'm kind of in the dark as well as far as Florida goes. I know it has huge potential. I just don't know how big we're really talking. Are we talking, that's like $100 million market by itself, a several $100 million market, a $50 million market? Time's going to have to play out there.
Delivery of the building materials has already commenced at the selected site, with its targeted assembly by the end of Q4. Allowing us to get plants in the ground and ready for sale as soon as the first quarter of 2023. This lines up well with our planned retail build-out of our first 6 neighborhood dispensaries. After a heavy due diligence period and looking at many locations across the state, we started announcing where some of these locations will be. This has been focused on major population and retail areas. This is the template that has led us to success for medicine in Las Vegas, attracting the local customer, and that's what we anticipate replicating in Florida. To put it simply, we are on track with the plan we had in place when we acquired the license to have cultivation and 6 retail stores up and running within a year. As was said earlier, we expect these 6 neighborhood stores to be followed by 12 more, and then by 2 to 3 superstores as the Florida market gets closer to an adult use transition. And of course, we'll have the supply to support a wider variety of products at that time. Turning to California and our acquisition of Next Green Wave.
So Florida is a serious market. That's the thing, and that's why I'm having trouble even trying to figure out how big of a market this is. They're talking about 6 neighborhood stores, followed by 12 more, followed by 2 to 3 superstores. I mean, that's a big deal. That's a big deal. I just don't know how big. That's an insane thing there, and it's hard to try to project these things because it's a new market. It's Planet's building new stores. It's a newer company, but my gosh, I have to trust the management team. They've done nothing but impress ever since I've tracked this company since late 2019. And so I fully put my trust in them, and they've got to see Florida just being a crazy big market. All right.
This acquisition was one of the few adjusted EBITDA and after-tax cash flow positive cultivation and distributors in the state. Their management team and cultivation staff have produced positive cash flows for over 18 consecutive months, and we look forward to having that efficiency and consistency not only implemented in our operations, but also our financial statements and resulting in enhanced cash position. We see multiple synergies with that acquisition. For instance, it gives us a chance to expand our popular brands in California, including Trendy and AHA edibles and beverages, which Larry mentioned earlier, all of which are top 5 brands in their respective categories in Nevada, per an independent source headset. And back to Florida, with respect to that expansion, it will allow us to utilize the next Green Wave executive team to take their proven cannabis construction background and operational successes in California and implement those in Florida. As a result, Michael Jennings, next Green Wave CEO and founder, will be leading this exciting project for Planet 13. We couldn't have picked a more suitable candidate for this position. Similar to Nevada, one of our priorities is to increase our own brand share of shelf space. This increased vertical integration drives higher gross margins, increases our brand equity, and acts as a differentiated draw for our retail locations. In Nevada, for instance, our medicine flower line is a regular reason for locals to visit our store. In fact, it is one of the things our investor email inbox gets asked about most often. In Illinois, while the license is still held up by regulatory and legal delays, we have been talking with landlords and local regulators at various locations in the region while we continue to narrow it down to an ideal location. In Nevada, we expect the lounge legislation to be finalized in the coming months, and in the interim, we are working through various potential approaches in both the short and long term to maximize profitability. We expect to receive approval and begin build-out of a cultivation expansion in Las Vegas within a matter of days. This expansion will add an additional 22,000 feet of indoor premium cultivation space that we've reserved for medicine flower. Once again, we believe...
That's great. More cultivational space, 22,000 square feet. That's quite a bit. So the lounge, basically, they want to build a nice lounge in the Planet location as well, where you can actually consume the product, because there's very weird laws around you can't technically use the product at a property on the Strip, which is completely insane, and people still do it anyways. But it's just weird law. So the lounge would be a big thing if people could actually legally use the product on the Planet premises, right, and enjoy themselves in that lounge. So the hope is obviously that it gets through here and they could build a really nice lounge, and then the Planet not only has a nice restaurant in it, not only has the production in the facility for mainly for looks, right, also has obviously the sales floor, but then has a lounge on top. I mean, then you start talking about a place where people could spend a good amount of time and they're not just in and out, right? Which I think is another just kind of cool factor of the Planet Superstore in Vegas.
Unlock improved gross margins, increase customer traffic, and ultimately more profitability. 2021 was a pivotal year for Planet 13. We acquired the pieces to take us from a single state operator to a multi-state operator with vertical integration in 3 states and retail in a 4th. 2022 is all about keeping our heads down and executing as we turn those pieces into the assets that will generate Planet 13's growth and profitability for the future. And with that, I again want to thank everybody for participating in the call, and would now ask the operator to open the line for questions.
Thank you. The floor is now open for questions. If you have any questions or comments, please indicate so by pressing star 1 on your touch-tone phone. Pressing star 2 will remove you from the queue should your question be answered. And lastly, while posing your question, please pick up your handset if listening on speakerphone to provide optimum sound quality. Please hold while we poll for questions. Once again, that's star 1 if you have a question or a comment. And the first question is coming from Bobby Burleson from Canaccord. Bobby, your line's live.
Yeah, good afternoon.
Hi, Bobby.
Curious about the
the Florida build out, what do you see as the most difficult to predict constraints in terms of, how smoothly and how quickly you're able to ramp in 2023 and going forward? Is it like permitting and construction around cultivation, or the actual retail site permitting, et cetera?
Well, this is Bob. Let me jump in, Bobby. Good question. So obviously, with respect to building the cultivation facility and the ancillary production facilities, as I said earlier, we've got material actually on site now. We did that in advance, as far advanced as we could, because of the supply chain issues that are affecting everyone in business now. So we think we've done a pretty good job of staying ahead of that and the uncertainty associated with supply chain issues. With respect to the retail stores, it's just a function of finding the locations and securing the local approvals. Now, that's not always easy and it's not always quick, but we're pretty good at navigating that process. And again, with having Michael on the ground there with us every day and working, with our consultants and real estate representatives, we've had some pretty good success, and we don't anticipate that that's going to change. We're very optimistic about meeting the schedules we set with the OMMU when we purchased the license.
Okay, great. And then maybe just switching gears to Las Vegas, and it looks like this is a good tourist season, and you guys should benefit in a big way. Curious kind of what the capacity is of the superstore, vis-a-vis, a big surge in tourist traffic, and any kind of early indications that you have in terms of what the season's going to look like.
All right, go ahead, Bob.
Well, yeah, look, we're optimistic. Again, we've been hit over the head with multiple strains of COVID for the last few years, as you know, and we've had a lot of steps forward, and then, unfortunately, we've had to take a step back or two. I'm encouraged now. I see the town starting to fill up again. I'm very encouraged to see the bookings for concerts and conventions, coming back to pre-COVID numbers. But look, there's the inflation aspect that we haven't addressed here that I think is something we all need to take into account. We've seen soaring gas prices. Just costs in general have gone up considerably. We're going to continue to monitor that, but even with those pressures, we've been pretty excited to see a return to normalcy with respect to tourists here in Vegas, and certainly as we come into the summer months.
It's always a countdown to how long until somebody talks about inflation on a conference call. It's like, when's inflation going to be talking about?
Coming from Doug Cooper with Beacon Securities. Your line's live.
Good afternoon, everybody. Guys, I think I missed the quarterly revenue from California, so I didn't quite catch that number.
Dennis, you got it?
Yeah, no, I'm here. Doug, just give me a second to pull it up. I don't think we mentioned the actual breakout of California. Part of the SEC requirements is we're considered one segment, and we don't provide the segmented detail anymore. So let me dig it up for you.
That would be amazing if they could break out Cali specifically, that Orange County store, so we could see month by month how that likely grows. I would love to see the February numbers versus the March numbers versus April numbers, April versus May versus June. I would love to see those numbers, and I'm sure a lot of shareholders would. If at all possible, I would love the management team, to do that. And by the way, if whenever you guys own a stock, always keep in mind, you can always email in the investor relations page. It doesn't matter if it's the biggest company in the world, Apple, or if it's, a smaller company, a $500 million market cap like the Planet. Obviously, you'll be taken more serious when it's a smaller company than a huge one, but you can always email in if you want specific numbers disclosed. It doesn't mean they're going to do it, but they could potentially do it if you find it helpful and explain your reasoning there. So always keep that in mind. Not a lot of shareholders ever even contact an investor relations page. Investor relations manager. All these companies have somebody that's just in charge of investor relations. So do keep that in mind in the future.
We'll go to your next question and I'll come back to you.
Okay. Bob, just on the lounges, I think in your speech there, you talked about in the coming months. Is this right? I think we were hoping to have this sort of done by the end of Q1. Is this sort of been delayed? And what are your thoughts on how this progresses?
Well, yeah, look, it was my expectation that we would have had something, here in Q1, but it's government. And, I'm encouraged. We've had some very significant movement in progress. We've had a number of workshops. I anticipate, based on the last workshop a week ago, there may be one more. Then I actually see this, going into final form. So we do see light at the end of the tunnel. And we're going to continue to push as aggressively as we can with our colleagues in the industry. But at the end of the day, it's the CCB will make that determination. But we're getting close, getting really close.
Okay. Dennis, you obviously had a number of sort of, I'll call them one-time costs in 2021. Through the conversion to a U.S. registrant or a U.S. Registrant. Out of the sort of $44.4 million of G&A expenses in the year, how many of that would you deem would be non-recurring? We're just trying to get a run rate for fiscal 22, I guess. At the end of the day.
Yeah. So let me go back to your first question. It's $2.6 million for California for the quarter. Okay. It's kind of a little over $5 million for the the year or the back half of the year. And then in terms of those costs, it was probably, I'm guessing, if I add it all up, we're still waiting for some of the final bills to come in on the Form 10 filing, et cetera. But it was approximately $3.5 million to do that conversion into U.S. GAAP, do the 3-year audits, and go forward filing that Form 10. So that was one of the big chunk of cost.
I'd love to see them ramp the Orange County store to $2 to $3 mil a month. That would be a thing of beauty. So if they could do 2 or 3 a month consistently, I would definitely call the OC store a big success. If they can do more than that, then we're really, really talking about that's a number you really need to hit, in my opinion, to call that store a major success. You got to be consistently doing 2 to 3 mil a month. If you start hitting 4 mil, 5 mil, then then I wouldn't go there, because then you're up to potentially Vegas store numbers and things like that. That might be a little much if you start talking about that. And there's been some crazy months for the Vegas location where they just hit some epic numbers. I wouldn't expect that from Orange County. If they ever get there, great. If they can do a 5 mil a month, 6 mil a month, my gosh, that'd be massive. But I don't think that's the expectation. I've seen the location where it's at. 2 to 3 mils would be good a month if they can do that consistently.
There were some other one-time costs. We had a couple of failed acquisitions in there. Probably added up to another $2 million in legal fees that we had to write off during the year out of that 44. Obviously, if you look at the G&A and the G&A breakdown in the MD&A, you can get a sense of where those buckets are. We talked about salary increases, being there. We are focusing quite heavily on trying to get our costs under control. Obviously, need to have those costs under much tighter control in order to continue to make money. I mean, our revenue is up 70%. Our costs were up higher than that, so that was part of the problem. We're actively working on that to bringing it down.
Okay. So as we look forward into 2022, obviously 2023 is going to be the group. You're going to get the impact of Florida in 2023, potentially Illinois, and I guess potentially the consumption lounge in 2023. As we sit here in 2022, if Las Vegas picks up in the tourist season and you guys gain some share there, you'll get there. But California obviously is a the major growth avenue, I guess, in 2022. Next Greenway being a good start there in building infrastructure. What is the plan? I mean, California seems to me, it's always been a bit of a, an anomaly. It seems like it's such a huge market, but nobody seems to be making any money. And at some point, there's going to be a return to rationality. And there's no clear winners there in such a big market. Like, what are your thoughts in California about what you want to be in the next few years there?
Well, yeah, Doug. California is a challenge right now. I mean, there are a lot of headwinds, no question about that, particularly on the cultivation side. What it's going to take in the near term is the state of California to get serious about regulating the industry and about taking meaningful action to curb the black market. I mean, it's out of control. And the tax rates down there are just unacceptable as well. So those are all hurting our ability to be competitive. That said, I still think the location for the superstore makes sense as we start transitioning, our products through the next Greenway facility into the store. We think that's going to help. I'm down there just about, at least 1 week a month now. I'm seeing a lot of improvement on the Freeway Construction and just an overall sense of, positive behavior from the consumers. People are, they're starting to put the masks away, starting to come out. I haven't seen the tours pick up yet, but, talking with, other operators and other industries, everybody remains optimistic that things are going to swing to the upside here pretty quick. So, yeah, there's a lot of positives. It's just taking much longer than we thought, and but we're going to continue to push forward, and we think we'll make significant improvement with the next Greenwave acquisition.
Yeah, I guess I'm just curious if you have the one store, obviously, and the next Greenwave is a very profitable company in the cultivation side and brings that vertical integration aspect to it. But do you want to open maybe more greenfield stores, or like in Florida, obviously you're obligated to open at least 6, but from the license. But do you want to open more stores in California? Maybe where would those be if you're going to continue to increase your infrastructure in the state?
Yeah, I mean, look, the challenges of California have obviously also created some opportunities. There are a lot of distressed assets down there that are becoming, more and more distressed every month. So we're continuing, to field inquiries, and we're looking at deals. Nothing's really hit our plate yet that gets us, terribly excited, but we think that there will be additional opportunities. And to your other question, we think most of those will be, a mix in the larger metro areas, and then we've seen some stores that have done quite well in the smaller mid-sized communities. It's just a function of the right deal. We've got our plate full, just trying to get Florida moving and getting next Greenwave integrated, but that doesn't mean we won't take a hard look at the right deal.
Mm-hmm. And maybe just my last one, then I'll get back to Nevada. You talked about 10% statewide. I'm assuming in Clark County you're continuing to be more than that. Can you talk a little bit about the competitive landscape there? Obviously, MedMen is continues to have difficulty. Just maybe the competitive aspect for the tourist dollar, and then maybe just some comment on the medicine, how they're doing for the local market.
Well, Doug, if you've looked, and I'm sure you have, you've looked at the state's numbers or last. I think they've published through December now. It's been very challenging, and
it's interesting. Before I looked into Planet, actually, the original company I looked into was MedMen, and MedMen just seemed like a mess, a mess. On the financial side, just everything. Like, I don't know. There was nothing good that came out of that, other than I kind of liked the stores. But then I went to the Planet store and I was blown away, and I was like, this is like 10 levels better than MedMen. So, when it comes to MedMen, that was just a messy one, and I saw the plan and I was like, oh my gosh, this management team seems like they got their heads on a lot better. Their financials were in a much better place. Their store was way more impressive. Not to say MedMen wasn't. It's just there's different levels, and there's no level above the Planet store. And so, so anyways, that was just interesting.
We've seen a pretty significant drop in revenue statewide. Look, there's much more competition here in the Valley, particularly for the local customer, and that's not going to abate anytime soon. The state is still allowing operators to open, and we're just going to have to deal with that. But as Dennis said earlier, and I think even Larry alluded to in his comments, we've held our own, and we're continuing to move forward. We think that we'll continue to be a significant or dominant player in the space. But again, with respect to the superstore, which is our biggest revenue driver, it's a function of how the tourist market looks. So we're encouraged by that, and we'll just deal with the competition, as best we can. That's
right. Is there any way you can quantify sort of the number of conferences, say, for example, that are booked in 2022 versus this time 2021? Any sort of indicators to show that Las Vegas is going to be that much fuller sort of coming up than it was in the prior 2 years?
Yeah, I don't have that data in front of me, but you can look to, for instance, the Las Vegas Convention Visitors Authority, and then you can look into, concerts that are booking, for instance, Allegiant Stadium and some of the larger venues. Their bookings are up significantly over last year. And so we're very, like I said, we're very encouraged with that, because those are real drivers for us. There are certain shows and certain events that, are fantastic for us, historically EDC, for instance. Whereas others, World of Concrete, for instance, that drives no traffic to us.
So the World of Concrete drives no traffic, but EDC does drive traffic. That does make sense. A few other points you'd want to look at is listener earnings, like Wynn's conference calls, MGM, Caesars, companies like that, where you're going to get some information on how Vegas is doing. Because a lot of times they'll talk about forward-looking, like how rooms are booking out, shows, those sorts of things, and so you can get a lot of intel kind of listening to those conference calls. Sometimes that's forward-looking, because sometimes if you look at some of the state data, the government-related data, a lot of times what ends up happening is they're lagging. So you see like what might have happened a month ago or several months ago or a quarter ago. We kind of want to know what's going on in the future. So a lot of times it pays to listen to those sorts of companies.
So with concerts, though, we get a very nice mix. It seems like for every large-scale concert, we get a nice bump. So that we're very excited to see that. We're very excited to see Allegiant Stadium being utilized in that respect. So it's much more than just a football venue.
Okay. Thanks very much, gentlemen. I'll pass it along.
Yep. Thanks, Doug.
Once again, if there are any remaining questions or comments, please press star 1 on your touch-tone phone. The next question is coming from Greg Gibas with Northland Securities. Your line's live.
Hey, good afternoon, Larry, Bob, and Dennis. Thanks for taking the questions. You mentioned some staffing issues in the quarter. Have they since improved? And if so, maybe what steps did you take there to remediate those issues?
Yes, it's Greg. I'll take part of it, Bob, and then you can do the frontline stuff. We're seeing significant pressure in the back office area, and the accounting staff, and sort of the administrative staff. The Nevada market is really heating up for talent, so we're having a bit of challenge keeping people from that perspective. We did get hit pretty hard with COVID, I think, at one point or another throughout the quarter, and the back half of 21. Probably 50% of our employees overall had COVID. We're out with COVID, so we did have some challenges there. But Bob, you want to talk to specifics on the store itself and the storefront there?
Yeah, no, Greg, good afternoon. Dennis is exactly right. The other thing we had, though, kind of more falling into Q4, we really staffed up for Santa Ana. So we were pretty heavy on staff there initially. We pared that back considerably to make it more reflect the traffic volume that we're seeing. So, challenges there as well. A little different in Vegas, but we think we're starting to, get our hands around that.
Yeah, Santa Ana was definitely overstaffed when I went to that location. I've only been there once personally, and the one time I went, I was like, oh boy, this store is way overstaffed. But at that time, the store was very, very new, and you want to give that good customer experience and have plenty of staff. You don't want people having to wait forever and things like that. So they overdid it, and that's okay. You know, I remember at Quick Trip, a lot of times we'd overdo it when we first opened a store as well. So, you know, it is what it is. But, you know, it hurts. There's no doubt it hurts your profitability in the short term. But you give a great customer experience, right? So,
you know, but there is a lot of pressure right now. Particularly with respect to, as I said earlier, you know, increases in gas. Where a lot of our employees are, you know, coming in now, you know, obviously bringing those issues to our attention, and we're trying to manage that as best we can. But it's not unique to our company. It's unique to all employers.
Right. Got it. That's helpful. And I guess along those lines in California, can you just remind us when some of those headwinds like the freeway construction are expected to, you know, no longer affect business?
Well, when I was down with our managers last time, the number I heard is they're about 8 to 12 months out for full completion of the 405 there. But, you know, based on what I saw and what I've seen the last few times I've been down there, they've made significant progress in the Santa Ana corridor where we are. So you can now actually get off the Fairview ramp quite easily in the harbor ramp. So that's very encouraging. So, you know, and the whole focus, of course, now is to be able to get Warner over the freeway into beach cities like Seal Beach. So, you know, that's going to be, you know, many more months. But again, you know, things are improving from my perspective considerably.
Okay, got it. And, you know, I guess in relation to the sales impact from COVID, you know, probably hard to quantify, but if we were to maybe, you know, if you think about it being a slower season anyway, near the end of the year, you know, how much do you maybe see from that in December? And I guess in relation to Q1, you know, I'm guessing a lot of it was January, and just wondering if you could try to maybe quantify or discuss, you know, how sales were impacted from COVID, you know, to the best of your knowledge, and, you know, maybe how February has kind of trended since.
So, Dennis, I'll pass that to you.
Yeah, so Greg, it's kind of harder. The COVID impact has been, you know, ebbing and flowing throughout the year. We've typically seen, you know, more seasonality in Q4. Obviously, October is strong. November is kind of 10% down on October, and December 10% down on November. We've seen that now over the last 3 years. January picks back up and improves. You know, but this January and February were not as big of improvements as they were, you know, this time last year. March, we're starting to see significant increases in March as the tourists come back. So I look at from that more COVID, but as Bob mentioned too, it's also, you know, shrinking wallet due to the high price of gas and the high price of inflation are causing some of that, and the lack of stimulus checks for some of our customers compared to last year. So it's kind of hard to pinpoint exactly what is pure COVID versus other, but you know, it's all having an impact. But we are seeing the uptick in March, kind of back to more normal levels of visitors and spend and average tickets.
It's important.
Okay, great. And I guess last one for me relating to the gross margins. You know, nice improvement, I guess, in the quarter despite the lower top line sequentially. Just wanted to ask maybe what you attribute that to and how you're thinking about gross margins in 2022.
Yeah, so the increase in gross margin was basically a larger share of the in-store sales at the superstore will come from our own brands overall as we push through, you know, our own capabilities and our own products into that marketplace. We also did see, you know, a softening in the wholesale side of the equation from a B and C grade flour, so we were able to pick up less expensive flour to process through our production facility. So we picked up some margin there as well, and we continue to completely sell out of our premium indoor flour, and, you know, have not seen any price reduction in that premium segment of our flour market compared to the rest of the flour market. So picking up some margin there as our costs come down, our yields improve at the Bell Drive facility that we're currently continuing to expand.
Got it. Thank you.
All right, thanks, Greg.
Thanks, Greg.
There are no further questions in queue. This concludes the Q&A portion of the conference call. Thank you, ladies and gentlemen. This does conclude today's conference call. You may disconnect your phone lines at this time and have a wonderful day. Thank you for your participation.
They're supposed to say, and have a great day, okay? So, as far as me with the planet, everything's on pace long term. There's definitely a lot of, I would call it, confusion around like how successful or not successful the OC store will be. I think we'll get a lot of that information next quarter, and especially as we go throughout the summertime. That will really, with a lot of the mask mandates going away, with things opening up, travel getting back to normal, I think we're going to get a pretty good idea. Obviously, you're going to have some headwinds around inflation, gas prices, things like that. But I think we'll get a pretty good idea this summer of like what the OC store can be. Florida's a wild card. That's like a call option for this company. I mean, when you talk about 6 stores, followed up by 12 stores, followed up by 2 to 3 superstores over the coming years, I mean, management has to believe that's going to be a 9-figure market in itself, meaning at least 100 million plus, in my opinion, if not several $100 million type market. So, they're definitely going to have their hands full with that operation, obviously in the Florida market. And then obviously with the Next Green Wave acquisition that they've completed now and integrating, I think that's going to be, really important for the future of the company in California and potentially out of California as they learn more. And then the Chicago is kind of getting held up by many various things when it comes to government. And that's part of the thing that you have to deal with this company, including the lounge at the Vegas location. You just have to deal with these sorts of things. And sometimes the state doesn't move as fast as you want it to do. The city doesn't move as fast as you want it to do. The United States in general doesn't move as fast as you want it to. And that's just part of the process with this. But as far as for reference, when I started investing in the stock, like I said, it was like $1 something a share. And this was a company that had one superstore. And now to see them have multiple superstores, to see them have the Medicine store opening now, talk about all these locations coming in Florida, the Next Green Wave acquisition just completed, the Chicago store coming. I mean, this is building into a giant in this industry. This is going to be that sort of company that's like one of the biggest, if not becomes the biggest in this industry over the coming 5-10 years. And so when I see that, I just say at $2 a share, I'll continue to buy shares. And as far as the long-term vision here, everything's on pace. And I'm looking forward to seeing how the Vegas store numbers trend over the summer, but specifically Orange County. That's what's most important for me if you're talking about short-term numbers and kind of seeing what happens here. And obviously the long-term, I continue to be extremely excited about. And the company's in a great financial position. So, woo! Hope you guys enjoy this as always. Hope you guys enjoy me doing these beast videos. Let me know in the comment section if you do. Also, make sure you get some free stocks from Moo while they still got those free stocks. Check out pinned comment for that. Deposit any amount of money, get 3 free stocks right now. It literally doesn't get better than that. Much love and have a great day.